Hi, buddy. Welcome back to Ox Talks. It is Tuesday, July 16th, 2024. Tuning in still here in Paris, France, here for a couple more days, and then heading down to Italy for a three-stop portion of the trip. First stop will be in Venice for about 5 nights. Looking forward to checking out Italy. Never been there before. If any of you have been there, I'd love to hear your thoughts or input or comments. Going to be doing Paris. And we're going to be doing Florence, not Paris, excuse me. We're going to be doing Venice, then we're going to be going to Florence, and then we're going to be going to Rome. So if you guys have been to those areas, leave a comment below. Let me know anything you can offer in terms of do's or don'ts, any local knowledge, things of that nature. Wanted to jump right into a couple of important things today as it relates to the markets. Firstly, just address briefly the gold and silver market. Gold closed today at $2,469.10. That is up $46.50 an ounce. And that, to what I understand, is an all-time high close for gold. The prior high, I believe, was set in May of this year, and that was at about $2,450. You guys can fact check me on that. Let me know if I'm correct. But I believe today put in a new all-time high for gold. There was an article out on the Markets Insider that came out just a little while ago that I just read after the gold markets closed, after the metals markets closed. It basically said that the take from JP Morgan is that the markets are pricing in rate cuts later in the year, and the markets are also pricing in a Donald Trump presidential win. They're saying both of those things are putting wind in the sails, so to speak, of the gold price. Don't disagree with that. I didn't see a lot of other news that was released today that would have influenced the price of the metals. I know the bank earnings came out. Then, of course, the big banks, most of them, except I think with the exception of Bank of America, did really well. Of course they did, right? They're earning 23% on all the credit cards that the consumers are running up and swiping to buy things that they really can't afford. So yeah, the bank earnings are doing well, okay? But let me shift, and by the way, the metals prices are something we need to watch. We discuss on this channel a lot about holding physical precious metals as a source of alternative assets, maybe a savings plan, if you will, a protection of some wealth, something that's highly liquid, in times of need, and it's something also is not going to lose purchasing power per se, right? It's going to help preserve wealth. I'm not giving you financial advice, economic advice, investment advice, just giving you some personal thoughts and information. But as we see this stuff start to go up, and I'm also going to discuss it and circle back with how it correlates to times of recovery when the stock market really crashes, and what happens with metals, what happens with the stock market in terms of the length of time it takes for these sectors to recover. Because when the everything bubble starts to pop, from my personal perspective, everything is going to go down. We saw it in 2008 again. Gold and silver prices went down. They did recover. But as these bubbles start to pop, and we're seeing it now in real estate already, and we'll discuss the stock market here next, you're going to see all asset classes, I believe, fall, right? And so then the question is, which ones are going to be the most resilient? Which ones are going to return to, let's say, break-even point, if you will, or pre-crash levels? And again, do your own research on this, do your own homework, but we're seeing a surge in metals right now, and that usually portends also a lack of confidence, as well as the markets believing that interest rates are going to be coming down, right? So the opportunity cost of holding gold is not as great. Let me jump into the main article I want to show you today. I don't have my regular routine here where I can print some articles out from my location, so I'm looking at my laptop. So forgive me if I'm tilting my head here over to the screen. But there's an article out of Zero Hedge. I want to preface the article by talking about the stock market. The Dow Jones closed up today 750 points, something like that. At one point I saw it almost up 770 points. The interesting thing, though, is the NASDAQ and the S&P 500 did not follow. They both closed up just a fraction. I believe each one of those closed up about 30 or 40 points to the upside, but not anything close to the parabolic rise that the Dow Jones enjoyed today. And so it's important that if you guys are in the markets, I have a lot of friends of mine that are in the market, and they're all in the market without hedges, without stops. It is just all, let's say, if the market goes up, they make money, right? And so a lot of people, a lot of friends of mine over the years through the dot-com bubble and even in the '08 financial crisis got burned, got lost a tremendous amount of their net worth because they were just chasing the markets, chasing the stock market in particular, and of course chasing those yields, right? So let me share with you this article. I'm not a big market guy on this channel. I do discuss kind of generally what it's doing from now and then from time to time. I don't delve into kind of like the psychology. I think today is a very interesting pivotal point possibly. And let me share with you this article and how it ties back, and then you guys can, analyze it on your own. And certainly give me your thoughts, give me your comments below. I know I get a lot of people saying, look, anybody who's been telling people over the last year or so to get out of the markets because it's too risky, have left a lot of money on the table. And look, I mean, if you've made the right choices, and there's obviously been some correct choices to make in certain sectors where you could make a tremendous return. So I'm not anti-stock market guy. I just think it takes time, it takes attention and effort and knowledge like anything else, or you can place substantial funds, right, and hard-earned monies at real risk. Okay, so this article's out of Zero Hedge, came out a little while ago. And it says gold soars to record highs as stocks do something not seen since October of 1987. Okay, and basically what the article says is today in the markets, there continues to be a very clear footprint across the market with rotational pressure driving small over big, low momentum over high momentum, growth into cyclicals, and popular shorts, it says, over longs. On the day, small caps, it said, exploded higher, plus 3.5%, with the NASDAQ unchanged. Today also saw us as a continuation of yesterday's Trump trade with Bitcoin, plus 370 basis points, and infrastructure up 240 basis points, leading the market higher. Since the soft CPI report last week that we discussed on this channel, the Russell 2000, it says, has exploded 10% higher, and the NASDAQ 100 has slumped, okay? The Dow has followed small caps higher, mostly due to energy and financial stocks, it says. But a glimpse at the S&P 500's lackluster performance is what I want to get to. Lackluster performance of the S&P 500 destroys, says, the hope-filled narrative that this is just a healthy rebalance into a broadening rally. And that was in quotes, quote, healthy rebalance into a broadening rally. It's saying that because the S&P 500 lagged today, that should not be necessarily a widely adopted narrative. That people should be very careful thinking, oh, we're taking the next leg up in the markets here, but you get on board. It says, with the concentration and positioning in mega cap tech so high, which we know it has been, the majors will suffer no matter what and passively drag the broader names down too. It says, for more clarification, this is just a massive short squeeze on the short alpha that has been laid as mega cap stock or mega cap tech took over the world. And we know what's happened with the tech stocks, Nvidias and Teslas and all these stocks that have just gone crazy over the past numerous months, all right? Huge returns on some of those. But now there's a rotation apparently out of those and into other sectors. It says, for context, this 4-day reversal is the greatest shift in the small cap / big tech pair since the collapse of the dot-com bubble. That goes back to the early 2000s. For more excitement, it says this is the largest 5-day outperformance of small caps over the S&P 500 since when? October of 1987. And here's um, the part I really want to share with you. And if you're in the markets and you're not hedged, and you don't have you know guards on, so to speak, and you guys know all the lingo for that, right? Where you have yourself hedged to the downside. It says, as a reminder, before the 2000 bubble burst, that was the year 2000 stock market bubble, the dot-com bubble. The three dullest S&P 500 sectors, consumer staples, healthcare, and utilities, had performed badly in the months leading up to the tech peak in late March of that year. But as tech rolled over, these sectors turned around and rallied 25 to 30% in the final 9 months of the year when the overall market struggled and tech slumped. Okay, so is that what is happening now, where you're seeing some of these stocks today, maybe today is the beginning of this, have huge gains as there's a rotation out of tech and other sectors? Is this kind of the blow off top, similar to what I just read to you happened in .com, when there was a rotation into those few sectors, into consumer staples, healthcare, and utilities, and they gained, it says 25 to 35% in the final 9 months of the year before everything came crashing down. All right? That is what I want to impart. And I shared that with a couple of my buddies a little while ago. And of course, the response is, we're just buying. This is like the roaring 20s again. There's money falling from the sky. And so I just hope that, well, look, there's no reason to say hope. A lot of people are going to get burned. A lot of people are just, only thinking about the fact that the party's never going to end. And at some point, the Titanic obviously will sink. Okay? And so when is that going to happen? Can you time this where you can obviously get all your money out of the market, the minute or the second or the day or the week before this whole thing implodes? The question, that's a rhetorical question. Can you even do that? My suspicion is that it's impossible. And so, by making some kind of transition now, are you possibly where you're liquidating, where you're going into other asset classes? Are you possibly leaving, 5 to 10% on the table to make sure that you preserve the free money that you've basically been given, let's say from all the tech run up in the past several months? And so the question is, do you take chips off the table and say, okay, I have this here, I didn't do anything to earn it. It's there, and so I'm going to pull some chips off the table, and I'm going to stockpile cash. I'm going to stockpile some hard assets, and I'm going to get ready for what is coming, and that includes selling real estate. If you have second and third properties, again, I'm not giving you financial advice, legal advice. I'm not telling you what to do. I'm just saying these are things to think about. All right, because there is a lot of, let's say, data out there that would support that we are, that the markets, right? And we know the housing market's already rolling over, but also the stock market and the other sectors are coming into a time where they're going to get destroyed. So, excuse me, guys. I just want to share that because normally I'm not a market guy, like I said, but there's these things just that everyone seems to be just partying like it's 1999, all right, to use that phrase. And it's not, all right? There's a lot of risk out there. We know that the average consumers, without to get repetitive, we covered all the time on this show, the average consumers are really struggling right now. The cost of everything have just skyrocketed, okay? But you have to pay attention to what's happening in these markets. A lot of money is in these markets. A lot of wealthy people have a lot of money in the stock market, right? And when this thing comes down, that will reverberate throughout the economy. These are the people that create jobs, a lot of them, right? These are the people that spend money, spend big money in the economy, spend big money eating out, spend big money buying, expensive consumer goods, spend big money traveling, all those kind of things, right? That when they start losing so much net worth on paper, like they did in 2000, they did again in 2008, 2009. How's that going to have further impact, right, on the lower and middle class, the ones that aren't holding all the wealth, that are relying on that 9 to 5 job every day, and their boss is the one maybe that has all their money and has all their assets irresponsibly piled into the stock market. So just something to think about. I will tell you, here on the streets of France, I checked today, France's debt to GDP ratio is 110%. The United States is 123%, right? I thought France was worse than the United States. It's not. It's a little bit better, not by much. But I will tell you this, there are thousands of cafes here. The streets are literally, everybody is on the streets in this 6 miles area of Paris Central, if you will. The streets are bustling. Shopping. Every cafe is packed with people. It seems like all day long, almost like 24/7. It is insane. It's nothing like I see, at least in my area in California, right? I mean, now we know the consumers in the United States are running up major debt, spending like it's like there's no tomorrow, right? Doom spending, so to speak. But this here, it's amazing to me. And I'm not saying amazing necessarily in a good way. It appears to be a younger population, but everybody is out. Everybody is spending money. Restaurants are packed. The pubs are packed. All the shopping areas. I've never seen as much high end, if you will, or high line, shopping places ever in one concentrated area like you have here. So let's talk about the security issues here. A lot of people are saying, hey, stay safe, lots going on over there. I am following the political situation. We were downtown today at the Paris Opera House. It's a big attraction to go see. That's right down the center of Paris, where everything is very congested down there. And there were a lot of agitators down there. So, they have these high-pitched whistles. They just try to make as much noise as possible with their groupings to try to distract. A lot of police standing around, not doing too much about it. Let's talk about the police presence here. The police presence is insane. Now, I know we're leading up to the Olympics. They're setting up all around this town for the Olympics starting here in about a week. But we went to the Opera House first. Then we were up at the Basilica on the hill. And I'm telling you, there are van loads of police officers that they have in these locations. And they're all standing around in groups of 5, 10 officers, all of them with sidearms, and about, I would say, 50 to 75% of them also with assault rifles, AR-15 style formats, that they're carrying around openly on the streets. So we have families, kids running around, and you've got a group, of 5 or 10 or 15 or 20 police officers staying there with rifles and pistols. So the police presence is incredible. Now, is that because there's some kind of a known threat? You would want to believe, if there was a known threat or a credible threat, that they would be also evacuating these areas. And I didn't see any of that. No panic. So who knows, right? Is there risk being there? Yeah, there probably is. As I'm sitting back looking at this, taking it all in, you're in these areas where they're targets. Are they going to become targets later on in the next few weeks during the Olympics? I would venture to say yes, but I've never seen and been around this much of a police presence. Let's talk about something I did notice about the police here. I've seen hundreds of officers, maybe even thousands this week, not thousands, hundreds. And they are all appear to be extremely physically fit. They are all weight in line. All the guys are pretty look pretty fit. The women, fair amount of women on the police force as well here, all appear to be fit. It's something that you do not see. It's noticeable here, right? You just don't have police officers running around at 300 pounds. that couldn't chase anything if they had to. So I thought that was interesting. I did catch that. I'm not citing anybody. I'm not making. I'm just, my theme on this channel. One of them is fitness. All right, and then we all need to be working on our physical fitness. I've shared my journey before on the channel about losing, the amount of weight I lost and what I had to do and the sacrifice and changes I had to make to accomplish that. So it's not easy. Everyone's got to start somewhere to do it. All right, and if you're in that category, you just got to take that first step, right? You've just got to really tighten up the calorie intake, and you've got to start having physical activity as a part of your daily routine. So I'm running on here about 20 minutes today. Those are the couple things I want to share with you I thought were important. So let's see what's going to happen. Final thought, gold, when the markets came down fast in 2008, the stock markets came down, gold and silver came down. And I did some research on that, and they said that gold basically was within 6 months, the price of gold had come back, and it took I think it's the S&P 500 about 2 years to come back to pre-crash levels. I've heard much longer numbers than that. If you guys have different figures there, share it with me. So I'm not saying that any asset class is going to be immune when these bubbles start to pop, right? There's going to be a loss of confidence, I believe, across the board, right? But then again, I look at which asset classes, are going to provide, let's say, the most security, okay, the most stability, especially for hard-earned, money that we all every day are struggling to try to accumulate, right? And that being said, I'll leave it there. 21 minutes, a little long. We'll be around tomorrow. Probably should be able to get a video up, I hope. Thursday will not do a video because we're going to be transitioning, flying out of France down to Italy. Have a great night, everybody, and I will talk to you soon. Bye.